The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here, Tiger Technicians Hour. And what are we looking at? We're looking at after a spectacular move over 1,200 points yesterday in the Dow. My rule of thumb always is a move like that when there's been a very strong, powerful rally intraday, and then the last hour sees yet another big move. Usually you give back 20 to even 40% or maybe more of the last hour's move. Well, we've just seen that. And then there's an attempt to get back to the high. That's the big question that we're going to be looking at right now. A couple of things going on. We've broken above this little mini inside track repellent zone. We broke above it yesterday during my show. I said we're watching this closely. Well, we went even higher, and today we've gone higher again. This becomes moot if certain things happen. If it goes to the 33,797 is the high of the day. If it goes to 33,850, I just get rid of that. It doesn't even, maybe it'll become support, but it's useless as a repellent. It's now a propellant zone. Most importantly, we're looking at this weekly chart. Let me just get back here. I want to show you something. This is the weekly chart. I made an all-time high at 36,952, January the 5th. When you think about it, we're only just over 3,000 points away from the all-time high. I mean, that is after 10 months. That is incredible action. And this is what I've been saying. With everything that's gone on this year, I was not expecting that there would be that crash type scenario where intraday, on a one-day basis, there's like a 20% move down. And if you look back, even if you have a huge rally after that, you're only going back to Tuesday's high or 3 days ago. What I said is I was anticipating lower highs and lower lows. And then at a certain point, I guess I better do that. Yes, this is a perfect time. It's Friday, Technical Friday. At a certain point, we'll see whether or not the sequence of internal lows and residual lows has been completed, and that we're going to find that we're in a different spectrum altogether. So let me just explain what that is. It's a Chapman wave technique, one of the myriad techniques that I've developed over the decades. I call it the dark news cloud cover. I wish I had a snappier a name for it, but I like the titles on my techniques to actually explain what it is. And what it says is, when the news is really bad, and it's like this sunny day, then all of a sudden you get the buildup of these clouds, and the clouds come on, and it gets very dark, and then lightning and thunder, and well, that's dark news. But how the market reacts to the news is the only thing that counts, because there's always bad news out there. There's always good news out there, but the headlines in the newspapers or the media is always focusing on the bad news. Okay, that's number one. So number two, in the technique itself, what I discovered years ago, and I can go back on this chart and say, I write the subscribers know that I do this all the time, been doing it for years. I didn't always call it the dark news cloud cover. I called it other things, but basically from, I think it was round about here. It was actually a little bit before that, but basically it was from May of 2021 that I actually, it was before that, but I titled it Dark News Cloud Cover. And basically what I looked at is that there is news that the market ignores, and then sometimes it's the same news, maybe with just an added accent, where the market comes tumbling down. What happens is you make a low. I call that the internal low, as if it's an earthquake. But with earthquakes, you can get an aftershock that's sometimes worse, sometimes better. These are the aspects that I talk about. And the internal low, everything is bad. The technicals, the works. By the time it gets to the residual low, you've actually got rid of a lot of excesses in many areas, and it's more an emotional low. I should call it internal low and emotional low, but I'm calling it residual. I'm going to stay with the residual low because that explains it in better terms. So sometimes that low is lower and sometimes it's not. So going from that May 10th, 2021, I showed you this, and then you had the arch formation. It made a slightly lower low back in June, got a beautiful rally, and then it goes again around about the 16th of August 2021. We've got the arch formation, and it tumbles down, makes an internal low sometime in September, bounces up and makes a higher low. Now I'm starting to draw in the Chapman Wave inside track pro-Palin zone. Well, it runs again to November the 8th. This is the daily chart of the Dow, and goes to a high. I type in dark news cloud cover, and then what happens is we turn down, we make an internal low right here, the 1st of December, and then we rally and we come back and we make an internal low, a residual low on the, you can't see it for some reason, it goes into a yellow candle. Never been able to explain that. 35,280 on the 17th of December, and it goes to a high to the 5th of January 2022. And that's where we made the major top, come down, make an internal low right here. This is the 21st of January, pops much higher, and actually makes an even higher, a lower that is higher than the low, but lower than the high of the 5th of January, around about the April area. It makes dark news cloud cover, and you come down, you make a residual low on the 24th of February. And then there's a huge rally, and it goes on the March the 29th. It starts topping out with the dark news cloud cover and pops down, and it makes an internal low right here. This was June, I believe. May the 20th of 2022. Has a good rally, stops, dark news cloud cover, turns down and makes a residual low much lower. That was that June low. That was a very significant low on the 17th of June at 29,653, and then skyrockets, stops again, turns around, has a little mini internal residual low, and it goes to dark news cloud cover 17th of August, and comes tumbling down, internal low right here. I should start typing the dates, otherwise I have to keep doing this. On the 3rd of October, bounces up, comes down, and makes the residual low on the 12th of, wasn't it the 13th? Yes, the 13th of October at 28,660, and now skyrockets. And then it hits this trend line. So it rallies up and it goes to the high yesterday. Now this high is higher than it was, and I put it only in gray, and my question was, are we about to see yet another dark news cloud cover, or is that going to change at this particular time? So I wrote it in only in gray on the 2nd of November to say, I'm just watching this closely. We are still long the Dow. We're still aggressively long with the 3 times long. In fact, this morning we took a tad off of the 3 times long for about a 40% gain. But I'm still holding that. In fact, I want to put it back maybe next week. So here we are, breaking out. And if we have, not even a close, but it's 1,281, anytime in the next week or two, that is going to raise the base significantly. Okay, got that out the way. We've got a break coming up. Dow's down 58, S&P's down, up 15. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. I've been asked if I would do a little more of my intraday notations with the Chapman wave. I think I'm thinking about it. I might do a whole chunk next week. I might have, maybe special days that we just do that. Look out this. There was a question earlier on. Now, I hope I can find the question because I said I would answer it. Let's see if I can find it. And the question was, it was more a statement. Oh, man. Yeah, there we are. Look over the past few days, weeks, etc. How many times do we get 100% of a move? This is Chuck in the den. A move right back up or down the other side, sometimes multiple times a day. So you're on your own. I have no good answer. Well, look at this. It depends on your time frame, but I've had webinars. If you go to if you subscribe to my newsletter, you'll get umpteen webinars, and some of them have been based on that very technique where I call the narrow rectangle and the wide rectangle. And within the rectangle itself, very often you get, look, if I give this like a elongated square and like a rectangle, and I'm giving you the borders, look how many times we've been in the S&P E-mini between 39.82 and 39.76, say. Up and down, but stuck within the border. Yeah, you make a fractional move to the upside. Now, the rule of thumb, in a narrow rectangle, it was a wide in the beginning, but it kept going, so that becomes a narrow rectangle. The rule of thumb in my work says that at some point, you should spike above the horizontal rectangle high, and if that happens, watch out, because if you come back more than halfway, there's a really good chance you're going to not only test the lower rectangle support, but break it. Well, lo and behold, that's exactly what happened here. That 200-period moving average at about 39.80, right there, the final one at about 9.15, saw a chance with the MACD turning down, stochastic turning down, everything negative, that there would be a sharp pullback below that trend line. Well, lo and behold, it went from 39.80 down to the 39.50s, 50 area, 51 maybe. And within that context, look what we've done now. We've got a much bigger rectangle, and we've had the left side, right side price time match in the Chapman methodology, bar symmetry from the high of about 910 at 39.80, plummeting down to the 39.51 area, all the way back up in, look, exactly, well, it was 2 bars early. The bar symmetry, if this is the plumb line right here, look, plumb line right there, right? We took the same number of bars to get back and then break above it, and now we're in potential leg F, going to, is this going to be the high of the day, 39.9750? No, we're at 39.88. We haven't gone to the high of the day yet. Wait a minute. All right, I'm calling this F right now. It says, all right, now you got to be a little careful, just maybe there's a little bit of a pullback, and we'll see what happens. So that's just the 1 minute chart, but you can do that anywhere. So the answer is, once the market sets up its boundary on the upside and the boundary on the downside, and it tests it successfully, meaning it reverses on the upside and comes back down, it reverses back up on the downside, now you're stuck within those ranges. And that's the reason why, like a yo-yo, or like a little ping pong ball in a tube, it can bounce up and down until at some point the tube ends and the ball either falls out or pops to the upside. Just think of it that way. Make it as simple as possible. Gravitational and trampoline, repellent and propellant, and at some point that's going to change. And it's exactly the same thing here. Look, this is the same question you had before, is the one that I talk about, I've been talking about ever since I'm here at TFNN. I say, isn't it remarkable how price knows, we might not know, but the price knows to stop at a certain point, and think of it as the tide. Look, here the tide since January the 5th in the Dow at 36,952 has been coming down, lower tide, lower tide, lower tide, lower tide. We might have changed tides right now, because we're above in the weekly chart, very nicely above the resistance level. But each one of these rallies had a certain percentage gain when it ran out of steam and got repelled. So think of this, it could be horizontal, it happens to be diagonal. But it's the same principle, that if you consider it in a horizontal way that the tide is stable and that the resistance, the cloud on the top, is stable, then you're stuck between those parameters. If you think of it as a tide, what happens is as the tide's coming down, you're setting the stage to have the repellent zone more active. At some point, time alone can do it. Sometimes it's price, sometimes it's just time. Takes you out of that zone. In this particular instance, because the Dow is leading and it's the Dow 30, the S&P is next, and the QQQ is following. Actually, the IWM is a little stronger than the QQQs. We've got to see the other indices. The general can't lead without the troops. It's as simple as that. Can for a little while, but then at some point they need to catch up. So this is the moment that we're going to have a test of the catch-up. So a question came in. I think it's appropriate right now. Could I look at ARKK? That is Kathy Wood. It's her ETF, very aggressive one, Innovation Fund. Let me get it. There it is. Yes, this is a really good move, and it's made a leg E in the weekly chart. It's made a G in the daily chart so that's an E, and this is a G. And absolutely, I didn't want to grab this. There's still going to be time. If this is going to move, you've got plenty of time. It's really important to give it, I think, about 6 to 8 sessions of trading from the low. We've already made 2 with a gap to the upside, not an island reversal, almost an island reversal from the low that was made just above 32. And yeah, we are at 38, 6 points. That's very nice. I mean, if I consider that for our Bank of America stock, going from 31 to 38 is really good. In fact, we took a little bit of money off today for a very nice gain. Then why shouldn't I say that going from 32 to 38 in ARKK isn't fantastic? The reason why I say it's just the start of a potential move to the upside is it's gone from 125 back in 125.86 back in November 2021 to the most recent low of 3 days ago. So any rally here is very early in its attempt 32.51 on the 9th. 32.51. Let's just put that in, 32.59, because I think it's going to be a little bit more significant than insignificant. So, yeah, this is a very good move. And if you're interested, now, so the question is, what was the question? Would I just look at it? I'm finding it. Uh-oh. I can't find the question. I think, could I just look at it? Yeah, I'm looking at it. But I do know that there are a number of people that have asked me whether I would, what would we do for subscribers to an opening call? And the answer is, we are aggressive at this particular point in our Dow position. I don't know how aggressive I want to get overall. I don't want to have everything 3 times long or the equivalent with ARKK, which is up $1.84. I'll talk about that when we return.
If you want to take advantage of the sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So with this particular chart, I'm just looking at the 1 minute. Here we go, the 1 minute E-mini. I was trying to use my backhand here. It's not tennis. Okay, so look at this little doji candle here. Normally I would put a down arrow, but the MACD is still okay. The stochastic has pulled back and the on-balance volume has turned down, but the 9 is still above the 14. So the easy thing here is if you were thinking that maybe we've had a really good move and now it's about time for some period of rest, I don't know if I would start a short position right here, but whatever it is, a close, not a pop, but a close above 3991.25, the high of 1023 this morning, that would be very good action. Say, you know what, you're starting to build some kind of a base, and the major support now is the 200-period moving average, which was resistance, now it's support at 39.76. my tendency would go right now to say short at 39.84, and I'd have I'd probably only have a 3-point stop maximum, and that's it. I'm just looking at this as a pattern, and if it starts to pull back, you get your arch formation, and it says round about 1036. By 1036, you should be testing the 39.76 level. So I'm going to be doing, as some of the people have said, hey, do that because we're learning a lot. Okay, that's what we're all about here at TFNN, learning. So we're looking at ARC right up against inside track repellent zone. Now, because it's had this kind of a move as a dragging yourself up because the others are acting so well, I would say if you're interested in looking at ARKK, because you understand the speculative side, it's got the worst of the NASDAQ stocks, but some of them are trying to form some kind of support. And instead of going for a particular stock that's in it, you could just get this. I would say you could put your foot in the door right now, 39.19, and hopefully it doesn't slam, because this is way too extended for this particular stock in this particular phase. I would say personally, I'd have patience to see if you can get it between 38.20 and 37.90 over the next two sessions. If it has a sudden pullback because the general market's pulling back, I think that would be very nice. And then I would have a stop. I would still have a stop of about 1.5 points. You could have a 2 if this is just a starter position. 2 would be about 8%, I'd say, on a starter position or a small position, let's say. But in the meantime, yes, this candle on the weekly chart, this green candle needs to close above the 30.78 level, which is the 14-period moving average, which it hasn't closed above since the week of the 12th of August. So RKK trading up $1.82. If this market is going to continue, and you've got to understand that yesterday used up an incredible amount of energy on the upside, and it just decimated anyone who was short. Certainly if they got short over the last couple of days, that would have been really tough. Okay, so with that said, that's my attitude in terms, it's a high-risk position, but if you're playing a high-risk position, you're going to have a slightly wider stop. And as I say, you can nibble here at 39.19. The real first entry should be at in the low 38s. Just for risk reward, and if it doesn't get there, and in fact it spikes by the end of the day to the 39.45 area, or it goes above the high that was made back in late October, right there, on October the 1st at 39.75. Oh, 39.75 today, that would be really good action. So that's the way I'm looking at it. That's why I'm saying just get your foot in the door right now. You could add to it if it's doing nicely, but I'm suspecting that I'd rather wait until maybe Tuesday or so for a pullback and then consider exactly what the market's doing. Because after all, you've got your down 104 points in the Dow right now. You've got that pullback from the Mariposa candle that you had. That is a huge candle with no wicks. I even include, even if it's a fractional wick, if it's that kind of a candle, I have a little leeway with it. And I am expecting some kind of a pullback, maybe even Monday, if today's only a doji candle or a little bit down. So, okay, with that said, we'll go to the next question, TGB. TGB is a copper stock. Beautiful move up today, up 10.5%. At 143, it's up 14 cents. You were thinking I was going to say up $1.43. No, that's the price of the whole thing, $1.43 to Seiko Mines Limited. If you look at copper, look what copper did. Broke out above the 200-period moving average. Now, I have so many charts. The Dow is like this. So many charts are like this. I've got an alternate count. Is this an old F, meaning, oops, be careful here, or is it a brand new leg C? You don't have to do anything because it's so good right now that the MACD is strong, stochastic's fabulous at 89%. On-balance volume's lagging, but it's still running very nicely. Look, the gray relative strength in the daily chart's really good. Weekly chart is good. Finally gotten to a leg D. And if stocks take as long as this after peak C to get to D, that D is very often not an end point. it is possibly the beginning where it can still go to E and an F. So this is very good action. I like to see it. So TGB, why does it keep doing that? TGB, let's see. I'm going to do it on the daily chart first. So what I did is I drew in a rectangle formation. I haven't updated this. Remember, I was speaking, discussing just a moment ago the rectangle formation, and that rectangle formation has a whole series of aspects to it, and most importantly, within the context of a rectangle formation, the longer it lasts, the greater it goes from a wide rectangle to a narrow rectangle. And within that context, what I like to do is to say, okay, as I said to Chuck, it could stay within those boundaries for quite a while. Sometimes it'll sneak above. So in fact, in this case, it went above. This is really the rectangle. I've made it very wide. I've gone to the high that was made back on the 28th of June of $3.85. And I've gone to the low that was made right here, 15th of July, $3.13. And then I went to a peak E, and then I pulled back. But it made all of these pullbacks, the arch formation. I just love this. I didn't want to go into too much detail. Now I can do it. I love this. Look at this arch formation. And look at this. It rotates between sine wave cup and sine wave arch, and now it goes again and it makes a cup formation, and it goes all the way to a high that was made right there. And now we've broken out above the resistance line, above the high that was made way back in June. That's a start of a bigger move, but it also says now you've got to monitor all the technicals, and the technicals are saying that the MACD's improved, the 9 is way above the 14, the stochastics at 89%, on-balance volumes lagging a little bit, but still very strong. So I like this very much, and it says that now the support at 3.88, where it is at this moment, is in the 3.60s. So on a very short-term basis, 3.60s now. If copper is making this kind of a move, let me go to SCCO, that's a copper, oh, look at that. Peak A, peak B, peak C, D, E, F, G/C. Yeah, this is fantastic. So copper is moving very well. You know, I have to tell you, the reason why we went long the Dow at the lows is because I was seeing that commodity prices have come down. Crude oil seemed to be on its way to steady or lower prices. There are a lot of things that were quite positive in the economy. I'll be back in a moment. Yes, good move, Dan. Congratulations. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So, we were looking at that peak F that I say is probably going to be a down arrow. I didn't put it at the time. I hadn't to full confidence yet, but then I did get it. So we did pull back from about the 339, I think it was 85 area, down to the 374. So that's the kind of thing that I'm going to do a little bit more of next week. I was asked if I would do it. I think I'll do it. I've done pretty much the same thing for 20 years in all my shows. Let's do it, make a little change up. So we're looking at, the question came in here, could I look at UNG? Yeah, just remember, if you were thinking of UNG, and I was going to do this for subscribers, I might still do it. At this particular point, UNG is the United States Natural Gas Fund. I'm not going to make a bet on this, but I'm willing to say that there's a way more than a 51% chance that if you bought it at 20.93 right now, even if it plummeted down to 16, sometime over the next coming months, with the winter coming up, there's a really good chance you'll at least get your money back. But the chances are that it'll go for the 22.85 level, the 200-period exponential moving average. So on a purely historic basis, I would say there's a really good chance that in this area of the 20, 21, 19, this is probably at least a starter position in the UNG. But I personally still would have stops in place, just because I do that for subscribers, because we have really big moves, but I also have a lot of little small moves, and they add up. And, you can have a 3% and a 2%, and maybe even a 6% on a small position or something like that. Well, all of a sudden we get this, 40% gain and at 17% in 2 days we made it in one position. We took a little bit off, that is, I haven't got out of the position because it's still acting so well. And that, that's the way I look at things. So I'm just saying that at 20.88 right now, if this is something that's been on your mind, you've done your own homework, because natural gas, look, yeah, it's the same chart pattern, obviously. Nice move up 3.5% today. I would say don't get too excited. It could take a little while, because I know here in the Northeast we've had fantastically. I mean, I played tennis outdoors on the 10th of November. Outdoor tennis yesterday before we go indoors. It will happen any moment. So that's going to change. And I'm just saying, I believe you will see natural gas at some point at 8, and it's at 6.24 right now. So, yes, so the question was, could I do some work on the UNG if I have time? Yes, I have time. UNG, I would say a starter position right now. I make it smaller than. I would just start a small position right now, 20.84. Even that, I would have, I'd have like an 80-cent stop on that. I know, yeah, you could get out and you keep it adds up, but when you finally get this thing to move, you're going to make a bundle if it can get to the 26s or 28s sometime in UNG, that is sometime in the winter time. So if you've got that kind of patience, if you're just a short-term trader, I would say only get a small position right now. I would have a stop at an 80-cent stop, and you have to let it go all weekend. Anything can happen over the weekend. But on Monday, then you start dealing with it. Hopefully it gaps up on Monday, and then it would target. The closer it gets to 22, it's at 22. It's at 20.84 right now. The closer it gets, it has to go all the way to 2180, 2220 to say the 200-period moving average of 2286 becomes a magnet. So it's got a lot of work to do. Okay. With that said, just a quick look at our VIX index, because we always like to do that being a Friday. Wow. It's taken, it looks like the dollar. Look, it's broken that left side. The uptrend line hasn't broken the left side low that was made back in July, was it? August the 12th. That was at 19.12, but it is an arch formation. I might even have to get rid of this uptrend line because it's getting useless now if the VIX keeps. But I am anticipating that at some point there will be, the question came in the longer term, what are you thinking of? And did you have this huge move up yesterday, a calculation for it? No, I didn't have the move yesterday, anticipating such a 1,000-point move, but we remained long. I had no intention at all after Wednesday's action of going short or doing anything like that. We remained long, and the reason was I've been talking about the prices in the whole concept of inflation just for the moment could be stalling because we've had such a big move down in some of the commodities, key commodities, and crude oil has held fairly steady in a range. And that, to me, was very positive in the macro aspect. So, yes, that was an incredible move to the upside. And as I say, this volatility index, it's way below the 25.77 200-period moving average every single day for the past 9 sessions. 11 sessions, except for today, has touched the 200-period exponential moving average, and it couldn't break above it. Now that is a very strong resistance. That, to me, is a positive. It isn't the positive. It is a positive. Oh, GoPro. I haven't looked at GoPro in years. In fact, it's probably over a year. GoPro, I lost my notation. So that's peak A, peak B, and peak C minus at 14, just under 14 back in 2021, January or February. Plunges down, and it comes down to the most recent low of 4 days ago at about 452-ish, 450, and now it's trading at 550. Okay, so this is what I'm talking about. ARKK has highlighted this type of stock. I'm not saying it has GoPro. I have absolutely no idea. But if you're looking for an entry, it's going to hit a lot of resistance in this 5. It's at 550, between 550, and even if it makes a new recovery high above the high of the 1st of November of 562, this is a brand new leg B, but the weekly chart is saying, oh, there's a lot of work to be done. So at a stock that's trading at $5.50, I'm going to say to the questioner, because this questioner understands the tech sector very well, I'm going to say, start your position right now at 550, but it's one that you want to, in this particular instance, I don't like to say this at all, but I am going to say it. I'm going to have to make the stop wider. At 550, I would give it almost a 10% risk at this particular point on this position. If, in fact, by Tuesday it hasn't taken out 533 or even hasn't broken under 540, but in fact makes a higher high, let's look at it again. I might even say add to your position. This is your little mini starter position right now at 550. Don't get too carried away. It's got a horrible monthly chart pattern, and the weekly is only now improving a tad. So, yes. Next question came in, and that is Exxon. All right, let's do Exxon. Exxon made a peak D 4 days ago, and I forgot to type in the high. The high, I didn't type in the high because it was just brand new, 114.66. So at 114.66, remember I had said, don't short these stocks, but at this particular point, I am anticipating a digestive phase. So for money management, take a tad off, and then let's watch it. Leg D in the weekly chart, leg G/C in the monthly chart. Big gap up today because crude oil is up sharply, and it's at 113.87. So at 3, up 3, 37. Yeah, I'm still considering that it's in a kind of a topping phase in the near term, not even short term, just the near term. So it's acting fantastic, and I think the person asking is remain in the position, Earl. Yeah, just keep your position. You can trade around it. That's what I would say. But right now it's acting well.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So GDX does have a leg D right at the 200-period moving average. Remember, it stalled underneath it. The last time it was there is when it broke down May the 6th at 34.72. And it plummeted all the way down to the 21s, and now it is at 27.95, stalling at the 200-period moving average in a gap up to peak D, but the stochastic's strong at 90%. MACD is good, 9-period moving average, so I do expect some kind of a pullback, and then it could dance around here, even with the dollar acting as it did. Just real quickly for those of you trading, look at this beautiful match. See the low bar right here? If you take the left side high, the doji, and the 1-minute candle, and you do a left side bar symmetry, look at this. It failed just under it at peak B, and now you have to use the arch formation. Remember, Chuck was talking about how it bounces from one area back again and then down again. Well, now the 39.77 area is going to be the test. If it breaks at any point today, if the S&P closes under 358 on a 10-minute bar, that says that it's probably going to close a little bit weak at the end of the day. We'll see what happens. So I'm going to wrap up here. I'm going to say have a wonderful rest of the day. Thank you to the vets. This is the service that they've done. just admirable for those of us who've never been in the Army or anything like that. It's just greatest respect. So have a wonderful rest of the weekend. And stay tuned. You've got a great program. You've got Steve Rhodes, who recorded his show earlier in the day. Steve does a wonderful job looking at all these different parameters. And, of course, I don't even have to tell you, you've got Thinkorswim. You've got Dave White, a lovely show as always with Dave. And, Larry Pesavento. And then Dave White. Then Tom O'Brien wraps it up for the rest of the weekend until we see you again Monday. Have a great weekend, everyone. Just a day of rest. You need that after a spectacular move like you just had. There's a lot to discuss, and for my subscribers, tomorrow I'll do my webinar. It doesn't have to be as long as it was last weekend because we were looking for something like this past week. Have a wonderful week, and I'll see you on Monday.